The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, after a rough week throughout the grain and oilseed trade, how did the markets react on Friday's session? Well, we found some strength in soybeans and in KC wheat, our upside leaders. The corn market also getting to react to news that the EPA's issued a summertime E15 waiver at the 11th hour, so to speak, ahead of a perceived deadline of Monday. Here to talk about the market trade with us and the impacts of all the different things swirling around this market here as we wrapped up the month of April. DuWayne Bosse, Bolt Marketing, joining us here today. DuWayne, always good to catch up with you, and at least we found a few green numbers on the screen Friday after just such a rough week in the market trade.
Yeah, rough about 10 days. It's crazy. Last Wednesday, you got May corn close to 686, close to the highs, right? And looking very strong. Everything was just clipping right along and just a complete collapse. I think, Jesse, it's a combination of a whole lot of things. I think you had the May option expiration, which I need to learn. These option expirations always seem to take a lot of profit taking and always seems to be to the downside for some reason. And then first notice day, of course, follows that. That was this week then. And then the weather isn't bad. And end of the month, funds wanted to liquidate any long position, it seemed like, and maybe even go short corn. I think we're going to find out.
Well, and those are all great points, and I was going to say as well. I know we've kind of been watching this market, and I know you mentioned this to me off air. We've kind of been lulled to sleep a little bit here the last couple of months in this market, waiting for that pop higher, wondering what was going to happen, and then now finally just getting so many news items together, and you get a lot of that fund liquidation. It triggers those sell orders. It triggers just the computer algo trading moves. And the next thing you know, we've taken a chunk off of this grain market, DuWayne. And it just goes to show how quickly the bottom can fall out from underneath us.
Yeah, what a great point. Your show, a lot of broken down market analysts have been talking about needing to hedge, protecting these profits. Because if you look at a spreadsheet, they are crazy profits. The problem is you got somebody like me who is bullish, whispering a little bit, this could really go higher. And it could have too. If the weather was a little different, this could have taken off. But Brazil's got a monster crop and our export demand seems to have peaked. The higher prices the last couple of years have rationed demand globally a little bit, and down we go. And like you said, it's always stair step up with these markets and then escalator down. This seemed like escalator with a rock tied to your feet. It felt like this time it was in a hurry. And every farmer, every broker does the same thing. Once it goes down that hard first day, well, once it bounces back up, I'll sell. It just kind of goes to show you can't wait for the market to turn lower. I feel like it's impossible to sell on the way down. I've tried for 20 years to be that good, and I'm just not. So I think we're back to the drawing board. I think you look back to your spreadsheet and your marketing plan. We adjust this weekend. You probably lower your targets and you set those prices up as targets, and you probably put them in place. And let's get ready, because there will be a weather scare, more than likely a little bit. But $7 seems like a long ways away now, doesn't it? I think we can kind of forget that.
It really, really does. Well, let's break down these grains individually. And let's start with the corn market, since you brought up, that $7 mark. Seems like that's a long ways away here. Obviously, options expiration, we're going to be rolling more into this July corn contract here soon. And looking at that and looking on the new crop side in D's corn, I mean, we're solidly below 6 now in both here. So one has to wonder, what is our support level now? I mean, as you take a look at this corn market, do you see anything chart-wise or anything in your gut kind of telling you what could maybe be a support level here for corn, both old and new crop?
Well, in real short term, let's look at the old crop first, that July contract. Today's low is our new support level. I know that's really close and not that far away, but with the announcement of the EPA E15 waiver today, I kind of feel like, okay, there's some good news. May is going to go off the board at 630-ish area, at least we're in deliveries this year. So really the 585 July is that does seem like a really big discount. So today's low, just below that 575 mark, that seems like kind of a line in the sand if you do have old crop. I don't know, like you were saying off the air, and I think you nailed it. It's kind of a flip of a coin. You're gambling now with bushels. You're going to be really right or really wrong, probably nothing in between. So that's what I'm looking for old crop. On the new crop December side of it, where we around that 525 today, that psychological number of 5 rings a bell right away. But I was doing some research and looking at, okay, if I lower export demand for old crop, if planted acres are at 90 million, sorry, I'm still not at that 92 million. And even yield is good, say a 180, because it looks like we're going to plant a lot of corn the next 2 weeks. And if you get it planted in the early part of May, trendline yield is much easier to get. I'm rambling, but you still end up with ending stocks anywhere between, right around that 2 billion bushels for new crop. Okay. Now, worst case scenario there, I guess I kind of feel like 450 is about where your harvest low should be for D's corn. Just with everything being par. Remember, Argentina does not have a big corn crop. Yes, Brazil's got a nice one, but Argentina is going to be so bad. I think South America is going to be a net reduction this year in corn production. So that's important to mention and to think about later on. Your market isn't talking it right now, Jesse, but they will be. So 450, 475 is your harvest low. If we're at 525 right now, Jesse, I'm not excited about hedging and panic selling here if that's what I think the harvest low is going to be. Yeah, we could just slowly grind there all year long, but I really doubt it. I mean, I don't remember a year where we didn't have a weather scare, especially with today's, social media news out there. Man, one state has a little bit of a scare and we all talk about it and all jump on board.
Well, and great thoughts there. And I know I mentioned to you off the air, $5 D score to me feels like a very scary level. And I hope we can hold that. And overall with these markets, obviously we can look at all the what ifs, but we got to trade the market as it is right now here. So wrapping up this month of April, definitely just a scary feel here to these markets, especially in corn. You mentioned the EPA news, EPA coming out Friday, officially announcing a summertime E15 waiver for E15 blended gasoline here for the summer driving season. How much of an impact do you think that's going to have on the market, on the corn market, the balance sheets, et cetera? What's your thoughts with that news?
I'd love to tell you right away that that's going to be a 50 or 100 million bushel increase in ethanol demand for corn. But I think what this announcement did is just stabilize us from dropping any lower. Weekly ethanol grind this week wasn't anything special. And I think everyone was a little bit worried it was trending the wrong way. But profit margins are positive for the plants right now. The problem is they have to pay so much to get the corn right now, right? Basis was strong before this futures market crashed. I call any grain merchants today and ask them how much corn they're buying, and I bet you it's not a whole lot right now. Farmers are going to be strong holders for at least a little while as they get out in the fields. So I think what it does is maybe it stabilizes ethanol demand. It doesn't drop anymore. Maybe we get a 25 million bushel increase out of it. But I'll let the experts over the weekend really break it down, and we'll look and see come early next week what people are thinking bushel-wise. But I just look at it as at least it stops us from falling anymore.
How about the wheat market here first? I want to touch on that. I should have maybe started with wheat because I feel like wheat has been our leader up or down here as of late.
Yeah.
Kansas City wheat, a solid rebound there on Friday. Spillover support Chicago. Spring wheat's taking it on the chin here the last couple of days. And I believe you tweeted this, or maybe it was someone else. Doesn't feel like spring wheat's doing a job to buy acres, especially after the week we've seen, but yet a pretty solid day on Friday. A nice rebound.
Probably is the dead cat bounce though for now, Jesse. I mean, I want to say this is the beginning of something bigger, and it should be. But I've probably said that about $1 ago on wheat. If I'm admitting I've been wrong this spring, I might as well go all in here today. Minneapolis wheat. My tweet was what I felt was dead on. That it's just like we're not buying any acres here, and yet we went down lower. Stats Canada came out with their estimated planted acres this year, right? And a little bit higher than the trade anticipated, just a little bit, but still higher. That's still planting intentions. I can tell you North Dakota is still cold and frozen, and we're going to see that in a couple of weeks when they still don't plant corn until about the end of the date there, or end of the final plant date period. So Canada, I assume, is the same, and it's going to be tough to get this spring wheat in on a timely manner, but they're intending to plant more, so that really drove the market down. I think it needs to stabilize, but Minneapolis wheat, that last USDA report, the quarterly stocks report, when they found 35 million bushels of spring wheat, that hurt. That's a lot when you consider our ending stock was just over 100. So finding almost a third more, 30% more was a big deal and hurt the market. But my God, you're right. It should find support here.
You would think. Well, and one nugget too that with this big drop in all 3 week classes, it sounds like we're now at least somewhat competitive with the cheap Russian offers. But even then, what does that do for any sort of export demand for wheat on that global market, DuWayne?
Yeah, no, you're right. I'm seeing that too. When you look at the economics now Russia's kind of put a floor on their wheat price, or at least told their exporters don't sell it below 275. They want to support the prices for the domestic farmers. That's great. So yeah, now with our crash, HRW, we're actually cheapest in the world. You don't hear that too often from the US. So we usually have such a premium. We always rally the market so we don't find any export demand. I'd kind of like to see wheat maybe stay here for a week or two, Jesse, see if we can actually drum up a little bit of demand. The problem with the global demand, I think they bought so much wheat from Russia already. I don't know how much more they need, but same with Minneapolis. Kansas City wheat should find a lot of support here. Had rains over the week, right, in Kansas, but it was southwest Kansas and southern Kansas. Northeast Kansas kind of missed out on it. Everyone's going to think we're going to see this great improvement in the winter wheat crop ratings on Monday, and it probably will improve, but I bet you the trade is disappointed in Jesse. Rain on dead wheat still doesn't help, I guess, is what I'm going to say.
Well, we are having a conversation today with DuWayne Bosse of Bolt Marketing. DuWayne, let's talk the soy complex here. And really a good solid day in beans and in products as well. I have to think maybe the EPA announcement was a bit of a psychological boost in bean oil, beans, possibly. I mean, not necessarily direct, but maybe just a little added psychological support there. What's your thoughts, though, with the nice rebound in the soy complex on Friday?
Horribly oversold too. So was the corn, so was the wheat market. It was probably due for a bounce. And when you think of all three markets, if you look back to old crop, which crop is the tightest? It's soybeans, and by quite a bit. Our stocks-to-use ratio is very tight there. So, yes, Brazil's a lot cheaper than we are for soybeans. But after this week, now we're only about $60 a ton. They're cheaper than us. That's not a lot. And like I said, we need to remember, we can't drop down to their price and increase our export demand. We would run out of beans. So I think we're right where we need to be. I bet you the rest of the market started to think the same thing. Like, we can't go down and match Brazil's price. That'd be problems. I did see today too, Brazil, a little bit of their cash market starting to find some support here. So if they're finding a low, a good chance we find a low as well.
Well, I'll ask you the same question I asked in the corn market as well. Looking old and new crop here with a nice bounce into the end of the month and weekend. What do you think's the new support levels here? Are we looking 14 on July beans and 1250 on Nove beans? That's kind of where my head's at. Where are you at?
I like those psychological numbers as well. For July, really good support is at 1383. I wouldn't say really good support, or just that's a line for me that if we bust through that, I'm a little nervous. That was the lows from back in late March and also back last fall. We break through that, I'm concerned. But like I said, I really don't see it happen. I really don't see it happening for me. With their tight situation, I don't think we should do that. The only thing is the funds are still long beans, probably. There was a whole lot of fund selling this week, and we'll see a commitment of traders report here this afternoon, but that's as of Tuesday night, and there was more selling Wednesday and Thursday for sure. So I think you find very good support there. For Nove beans, I'm kind of like you, that 1250 is a really big mark. Should stay above that. Remember, like I said, they can't lose acres either. I could have just as well tweeted that the soybean market isn't buying acres, and they can't lose any with that tight old crop situation. I'll talk eventually about maybe new crop export demand being pretty poor for soybeans eventually because of Brazil's big crop. That big crop probably has a very long tail in the export market, but that's hard for us to forecast that a year out. So it's still going to be fairly tight in beans unless we gain acres, and this is not doing that.
Well, DuWayne, let's talk livestock. Hogs. Hogs, hey,
Oh,
more
hey.
days higher than lower this past week. It's a miracle. We've been so beat up in this hog market, and maybe, knock on wood, everything wood around me, maybe we finally found a bottom and support in this hog market. What do you think?
I really want to say yes, and I think so. Really nice U-shape, V-shape bottom, which does happen in livestock, of course. Cash and cutouts not rallying, but we always knew that the futures market would rally before then, right? There's going to be smart people out there that know and see that coming. Export demand was great this week. Weekly export sales for pork was a marketing year high, looking very strong. That ASF story out of China, still haven't heard a lot about it, but any ASF news, any disease, any pigs dying in China is a big deal. They weren't huge buyers this week. It was Mexico, but they were in there buying a little bit of U.S. pork. With the U.S. dollar sharply lower, our prices down sharply lower from the highs, it is about time to find some support. And remember, production's actually supposed to decrease this summer year over year. So, yeah, I think we found the low there.
Well, and in turn, looking at the cattle market, we kind of got a little choppy here, it feels like, in this cattle market. I'm looking at cash trade. We picked up some southern business finally on Friday around that 173 mark with bids a couple of dollars higher than that. Dress business has been off $3 to $4 here. This kind of this standoff again in feedlot country, but cattle still holding in there, just maybe chop it around till we find some direction one way or another. DuWayne, what do you think?
Makes me a little nervous, Jesse, that maybe a couple of weeks ago, maybe that was the high in the cash market. It shouldn't have been. Our supply should be a little bit tighter in the upcoming weeks here, but box beef should top out in the next 2 weeks as well. So I'm just a touch nervous. Weights are still down. They were down a little bit again. So feedlots are very current and could hold for more, but they also see this price too and want to just let it go. Packers are very good at, keeping cash as low as they can. I'm concerned. I'm still a bull, but April goes off the board now, right? So come Monday, June is the lead month, and that's going to look like an easy trade that June has to go up to meet where cash is. And remember, June is a long ways away from delivery, and it does not have to go up. Actually, the market that never has to do what I tell it to do. So I'm kind of wondering if we don't have a little bit of a pullback next week. And I'm getting nervous because these funds are long this market. And the more this market goes sideways and they are not profitable, the more they got to start wondering about taking those profits. And that would mean a lower market. So I'm a little concerned.
Well, overall, too, with this market, I think the broader economic picture, summer grilling season, we've touched on this before, that's going to weigh into the demand picture domestically, tie that in with our export demand as well in both of these markets, cattle and hogs. That's going to be a pretty hefty storyline, I think, to watch here over the next 60 to 90 days, DuWayne.
Yeah, it sure will be. This inflation hitting everyone's pocketbook, what happens at what price level does that beef look a little too high and pork looks a little cheap, so that's maybe that spread starts to narrow in. But those feeders, Jesse, man, are they still on fire on the cash side of things? Finally getting some green grass coming in pastures, guys are going to be aggressive buying them. That market still looks like the leader to me. And overall, I still think August wants to go up and make new contract highs, which would be above that 240 mark. And if that happens, June's going to follow a little bit, and maybe we get a high of 170. But yeah, if I'm looking long on any of the livestock right now, it's probably actually August feeders first. They just got the fundamentals to push higher.
Well, DuWayne, great thoughts as always. Before we wrap it up here today, floor is yours. Any final thoughts? Anything else you want to reiterate to folks here before we run out of time today?
Well, I think a lot of producers are just like me, wishing they were heavily sold or at least more sold than they are on new crop and maybe a little bit of old crop. It's an okay time to just hit the reset button over the weekend, go back to that spreadsheet, maybe make new targets for your marketing plans. Really like some courage calls here at the low. $6 August short dated for 7.5 cents today. That's not bad. You buy a lot of those, and I think you'll feel better to be aggressive as the corn market rallies and sell the corn market before the beans. Beans are still fairly tight.
Well, DuWayne, if folks need some advice, I know they can reach out to you there at Bolt Marketing. What's the best way?
Yeah, they can just call us directly, 605-448-2365.
And they can also find you online, boltmarketingllc.com, which is always another great way to reach out too. I know. DuWayne Bosse, Bolt Marketing, always a pleasure, sir. Thanks for joining us here today on Market Talk. We'll talk to you soon.
Thanks, Jesse.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.